over the course of the week. Now, I know because it is Valentine's Day that some of you are eager to get on your way to your various Valentine's activities. So I promise if you stick around to the end, we're going to have a special look at the love stocks. Now, you'll see what that means as we get into that discussion, but a couple of quick housekeeping items as we start this discussion. Remember, everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation of any kind. It is not advice about any security or strategy or instrument or anything else. If we do happen to talk about options, remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options prior to considering any option strategy. Now, we're going to talk about technical analysis. There are lots of other ways to look at the market, fundamental analysis, probability analysis among them. They are all theoretical in nature. None of them are guarantees as to what's going to happen. And because of that fact, Schwab doesn't recommend the use of technical analysis as a sole means of investment research. Past performance, no guarantee of future results. There's the potential to lose money in the market. Remember that investing involves risk, including the loss of principal. And if you put a stop order on, remember that that stop order doesn't guarantee the execution price, just lets you specify the activation price. In the event of a stop limit order, there's the potential that the price of the stock can gap around your limit area. And we're going to be using the Thinkorswim desktop software platform today, specifically the paper money version. It's a great learning environment. It is not, however, a guarantee of future success out there in the real world. So we're going to take a look at the general trend of the market, what moved the markets this week, how maybe individual components of our portfolio were impacted. We're going to take a look at some of the various aspects of the market, including what's been going on with interest rates and energy costs and things like that. And so let's do that. We're going to jump out to the Thinkorswim desktop software platform here really quickly. And as we go ahead and jump out there, a couple of quick reminders while we're right here. Click on that subscribe button down at the bottom of the page. It's going to keep you connected to the Trader Talks webcast channel. It's going to let you set up alerts for new content, new archives, all of that great stuff. Stay in contact with the Trader Talks webcast community, and it is at no cost to you. By the way, you can also follow me. You can follow Cameron on X. You can follow all of our education coaches on X. The naming convention is really simple. It's just first name, last name, and then the letters CS after that. So I'm at Ben Watson CS. Cameron is at Cameron May CS. Follow us over there. Lots of great stuff. We even post on the weekends in that environment. So you'll get some content going on there as well. But let's take a look at what's going on here with the SPX and kind of the broad definition of the market. As we say, hey, it's been an interesting week here in the market. I feel a little bit like Garrison Keillor. He always started out his Prairie Home Companion with segment with, it's been an interesting week in Lake Wobegon, but here we are. It's an interesting week in the SPX, or maybe not so interesting if you take a look at in terms of movement. And as we start to look at this kind of scenario here, over the course of the last couple of weeks, it's been fairly similar. We've been kind of squeezing in between the 20 period or 30 period, 50 period moving average. Lots of different ways that we can calculate the market, but we're looking at a 50 period here and seeing that price movement on the SPX getting squeezed in between a level of support at that 50 period moving average and a level of resistance up here right around the 6103 mark. Now, the market closed today at 6114, and that follows a pretty big up day yesterday on maybe the relief on the part of the market and the fact that tariffs were delayed. Generally, what's been going on, we've seen over the course of this last week that the market reacts negatively to tariff indications and reacts positively to delays in tariffs. So I don't think necessarily have a true read on how the market is going to react if tariffs actually do kick in, because there's, obviously various, determining factors regarding that. But let's take a look at the NASDAQ today and over the course of the last week. A little bit stronger here on the NASDAQ, a pretty solid breakout of not only this diagonal trend line, but also perhaps a horizontal resistance around the 21,937 mark, making a move to the upside and continuing a little bit stronger than the SPX today. with a little bit of a rise in the RSI. So that would suggest to me, just simply looking at those two in comparison to one another, the SPX, which is the broader index, NDX, which is the technology-heavy index, and that really kind of gives me an idea that maybe there's some rotation back into some of that technology leadership now that we're kind of beyond the midpoint of kind of earnings season here, if you will. And about 77% of those companies reporting earnings have reported beats to their earnings expectations. So I think it's been a pretty solid, at least from the for the most part, solid earnings season. We'll see how that maybe plays out going forward. But let's take a look at the Russell 2000, which is the kind of the one of these things is not like the other difference here, right? And we start to see this little bit of a turn down in the 50-period moving average on the Russell 2000. The Russell 2000 seeing a little bit of a rally over the last couple of days, but again, a bit of a bearish day today, banging its head as it has oftentimes over the course of the last couple of weeks into that 50-period moving average and the RSI turning down. Now, in this particular case, you know, we have to remember what the composition of the Russell 2000 is. It's shifted a little bit more towards those technology stocks, which is why when technology is rotating in, we tend to see a little bit of a lift, but it is also interest rate sensitive. And so interest rates rise, as they have been, with the exception really of today. As those interest rates are rising, that is kind of a weight dragging on this Russell 2000, the small cap performance. These are companies typically that have to borrow to continue operations or to fund growth and aren't doing it necessarily out of operating revenue. And so borrowing costs are a significant impact. And that may have an impact here, because if we start to take a look at rates, I'm going to switch to a different grid here really quickly. I'm going to look at our yield versus the SPX. Here is the 10-year, and we can see that the 10-year yield today making a move to the downside. That has tended to maybe correspond with that little bit of a lift in the SPX. At the same time, we see that the Russell 2000 may be being a little bit more sensitive to this. If we were to change this to the RUT, the Russell 2000 index, let's just change that really quickly, temporarily. You can see that relationship that is coming pretty close to an inverse correlation between those two. So let's go back to the SPX here really quick and kind of get a sense. SPX moving higher, 10-year moving lower, and that correlation kind of moving more towards a neutral range, right, in this particular case. So some other characteristics here. Volatility in the market overall has generally bled off a little bit, although it's still staying relatively high. Relative to these lows that we saw in December, back here in June and July. Certainly nowhere near on these spikes. And again, this spike here up to that 65 mark, this was the yen carry trade unwind. That kind of skews and compresses the rest of this chart. But we can see that if we were to draw that diagonal trend line over the course of the last really 2 months, 2.5 months, really since the beginning of the year, post-election, everything else, I mean, we start to see that volatility had been rising. It's now breaking down below that diagonal trend line. And so that maybe gives us an indication that volatility bleeding off a little bit, that even though there's some uncertainty, right? Uncertainty about tariff impacts, uncertainty about changes in the administration, uncertainty about all of the things that might be happening, swirling around from a news standpoint. The market is still looking at the idea that there's a solid uptrend in place and it hasn't been challenged. It's not breaking down. The uptrend is still there. We're not making lower lows yet on the market. And to correspond with that, if we shift to this next grid, which is the SPX versus the SPX equal weight, and I needed to recolor my labels here, but this is the SPX broad market, right? So this incorporates everything and is cap weighted. And this is the SPX equal weight where everything is equalized, and that kind of takes out the impact of the Mag 7, the technology leaders, and you can see that the equal weight may be pulling back a little bit. So that would maybe suggest, if we take those out, those leadership stocks out, that there is that rotation back into some of that technology leadership, right? That now the SPX gaining strength above the SPX equal weight. Now, there's probably some debate that could be had about whether that's a good thing or a bad thing, given the fact that, if all the leadership is concentrated in the technology leaders as it has been before, does that speak to the lack of breadth, strength of breadth in this market? And maybe that's the case. But, nevertheless, the trend is still moving to the upside here in this particular case, right? So John asks a question here. John says, well, wait a second. Is there anything that we're talking about that suggests a particular value stock? That if we have a value stock that is, fairly valued or undervalued relative to its stock price, that it can perform? And I think Cameron's doing a great job here in kind of melding together the perspective of stocks that have value, right? Companies that maybe traders want to buy, and then looking at technicals to make a decision about when potentially to buy, right? And so as an investor, you have to pay attention also, I think, to what's going on with interest rates, what's going on with the trend of the market as well. And, I think that's kind of the perspective, right? There are more advantageous times sometimes to get into trades, more advantageous times to get out of trades. And despite what the market might be doing, or despite what the individual stock might be doing, or despite its value, right, we have to kind of look for evidence that tells us, hey, this is the time to get in. This is the time to get out. So some good ideas and good thought process here. So let's do a couple of things. I want to scan kind of around the broad areas of the market broadly. First, we've taken a look at the major indexes here. I also want to look at some of the other forces at work. So I'm going to come down here. We're going to bring up a couple of other grids. We saw what the yield curve is doing, but I'm going to put this on my single grid. It's just kind of my playground for looking at individual instruments. So this is the SPX. We can kind of see that little bit of a blow off candle here at the top today. But I wanted to look, and I'm going to look at some of the futures markets. And in order to do that, I have to display futures symbols. I am not suggesting trading these futures. These are simply for market analysis here as we talk about this. So if you're going to trade futures, remember that futures trading is highly leveraged. It is highly risky. Make sure that you're aware of the risks of trading futures, and remember that it takes separate trading authorization to trade futures. So we're not talking about trading specific futures contracts. We're talking about the contracts themselves. So let's take a look at 10Y, which is the 10-year yield. And this is yield futures. So this would suggest that there was some bond buying. We had a 10-year yield auction this week that was taken down, and some pretty good buying activity going on, which means that yields were coming down a little bit, perhaps continuing this head and shoulders type of reversal. We might see that move back down into what has been a support level around that 4.33 range as well. That's yields. That's what interest rates are doing. We have the Federal Reserve. We had Chairman Powell talking about the markets in testimony this week. He said in his comments that the central bank isn't ready to lower interest rates yet, especially with that uncertainty. And, that Fed officials indicating that they're not going to take that uncertainty for granted. We had a couple of economic data points. We had CPI, PPI that came in that changed the nature of the yield as well. And we see that kind of bleeding off a little bit. Now, let's take a look /DX, the dollar futures. Dollar down as well, and we're seeing kind of, again, that head and shoulders type of pattern. So the dollar off a little bit today, dollar weakening just a little bit, which, again, this is an area which is going to be impacted by tariffs either positively or negatively, depending on which side of the coin you are on that tariff discussion. But the dollar is showing a little bit of weakness, which would suggest perhaps that maybe some of the commodities themselves might be getting a little bit stronger, especially those dollar-denominated commodities like /CL, which is the crude oil market. Although, again, this is one that, boy, is just stubbornly sticking down right in this $70 range a barrel. You can kind of see that coalescence right around that $70 mark. And once again, it was a down trading day down into that area, and suggesting that maybe still a little bit of weakness in terms of oil prices, despite that uncertainty, despite a weaker dollar. Typically, when we have a stronger dollar, this price goes down. So the correlation of a strong or a weak dollar and declining crude prices may suggest that if the dollar were stronger, or back where it was over the course of the last few weeks, that we might see crude oil prices even a little bit lower. /RB is the gasoline market. That's generally rising as well. If we take a look at /HO, this is the heating oil market, which is a proxy for industrial transportation, namely airlines and trains and things like that. And that's generally been rising as well. Yeah, AC asks a great question. Is /RB, that's gasoline. And we consume the vast majority of the gasoline that we refine here in the United States, So it's not necessarily an export product. We do export some, and we do move it around the country from place to place. But heating oil and gasoline, the distillates, the refined products coming out of crude oil tend to be showing some strength. Gasoline showing strength, heating oil showing some strength here as well. So still a little bit of demand there going into this kind of middle of February timeframe. Of course, this is when things like natural gas start to come off a little bit, and we're starting to see natural gas rise once again. That natural gas contract in this market moving a little bit higher over the last few days. So that may be speaking to more about the weather than it is to any other geopolitical forces. But that's kind of giving us a sense there. Now, my shout out here to James Boyd is to take a look at lean hog futures, which saw a contract adjustment here, a contract rollover. But boy, they've been on a big move to the upside as beef prices have been /LE. Beef prices have been on the rise, now starting to pull back simply because of a lack of available supply. And so those future contracts coming down a little bit, but hogs, pork prices going up. I don't have a chicken futures market, but we could suspect that with the Super Bowl and with a lot of those types of activities going on, that chicken prices were likely higher. Certainly egg prices, and we don't have egg futures here either, but those have been going higher as well. Let's take a look around the various sectors. So I'm going to bring in my sector grid here, and let's take a look at the sectors. We'll just kind of roll through these. And we can see that energy has generally been doing and replicating what crude oil has been doing. It's kind of been sitting here. I guess, Stephen, you're right. Egg futures would be chicken futures, wouldn't they? Which comes first, the chicken or the egg futures? I don't know. But energy kind of going sideways here and staying on a downward trajectory generally over the last couple of months. Materials, which is sensitive to energy as well, starting to see a little bit of an expansion pattern. And from a technical analysis pattern, and Cameron will tell you this, and Cameron teaches a great series of getting started with technical analysis. But when you start to see these expansion or bugle or trumpet or broadening formations in markets, that's typically not a bullish sign. That typically indicates some exhaustion of the bulls as opposed to the bears. And so we may see these materials in this material sector start to move to the downside a little bit. Again, no guarantees of that, but that's certainly what technical analysis might suggests in this particular case, industrials kind of on a short-term downward trajectory, but starting to see a little bit of a pickup here. And again, industrials also includes things like companies like the airlines, for instance, right? And those types of things. So consumer discretionary, the things that we want to buy, retail sales numbers were a little bit soft today. One of the reasons that we see consumer discretionary coming off just a little bit in today's move underneath the 50-period simple moving average here, and really kind of maybe squeezing into a fairly narrow range. Consumer staples, on the other hand, the things that we have to buy, and that includes food, and that includes other consumer products, that's been rallying pretty solidly. But again, retail sales numbers pretty soft today, and maybe a little bit of a pullback. Nevertheless, maybe pull back in a retest of this support area right around that 900, what was previous resistance, with the potential for a bounce here and maybe a move. So something that might want to pay attention to from that perspective of where those possible moves are. But of course, with low volatility, that would suggest maybe again some movement back into that technology leadership as well. Healthcare seeing a big down day today, right? And if we continue to move through this, financials seem to be the strongest performing sector, at least at the moment. This sector, again, with yields moving the way that they have been, and try to answer a couple of the questions. Trade and Grow asked the question, why did yields drop, especially given the CPI, PPI numbers suggesting worsening inflation? Well, yields are a part of that, right? And yields are also sensitive primarily to bond purchases. So if there were bond buyers, whether that bond buyer was the Fed, whether that bond buyer was a sovereign foreign government, whether that bond buyer was individuals or institutional investors, it doesn't matter. The yields were coming down. It was because bonds were being bought, and buyers were willing to step in off that 10-year, and it may very well have been the government repoing those or buying back those bonds, bringing that move back up to that yield moving down, bond prices going up. But financials doing relatively well here, kind of moving sideways. Typically we start the earnings season with the banks. We're going to rotate into some of the regional banks now, announcing their earnings, and that's going to have an impact here on the financial sector. Information technology, you can see the strength. Even though it was moving to the downside, generally the 50-period simple moving average here flat. We were seeing lower lows, but boy, return perhaps again to that leadership like we saw in the differences between the SPX and the NDX, and the SPX and the SPX equal weight, giving us an indication that maybe some of that move is happening here. Communication services likewise, and that would be similarly. We saw moves in Netflix and others over the course of this week, and so that may be suggesting again that rotation back into some of that technology leadership. Utilities, which are broadly interest rate sensitive, kind of staying neutral, kind of staying in the middle here and not really reactive to those rates. You'd think in a day where the rates were down, the utilities might pop up, but there maybe is a little bit of weakness there. And finally, real estate, which normally real estate, again, sensitive, especially to the 10-year. 10-year falling typically tends to lift real estate, but it's got a pretty good level of resistance right here in this 265 range to overcome in terms of moving higher. And we've seen some moves in some of the individual stocks within the real estate sector and some of the home builders not performing very well in terms of earnings. And then we come right back to our SPX. So now that we've kind of cast our eyes around the broad market, let's take a look at some of the individual names that have been moving this market. And so I wanted to address a couple of questions that were coming up here. Where do we get those sector symbols? Cameron answered the question I wanted to show you really quickly. If you come over here to the Market Watch tab and you go to your watch list, and you come down here to the public set of watch lists, and you scroll down through this list, and you come down here to this one that says public, and then it's S&P 500 sector indices. then that's where I got that list, and that's what I'm using to drive that set of charts, is that sector index list. And you can see the different indexes for each of the sectors: energy, materials, industrials, consumers, healthcare, financials, infotech, communication services, utilities, and real estate. So that's what's driving that. And you can even sort this by net change over the course of the day. Healthcare was the worst on the day. Information technology, the strongest on the day. So that's where you can go to find that information. While we're here on the MarketWatch tab, a couple of things. We can pop over here to the calendar. Here's our week ending today, and we're just going to show all of the things that have gone on over the course of this last week. We've got earnings announcements. We've got Econoday events. We've got a bunch of things happening. Now, we don't have any earnings after the market close, and that's traditional on a Friday. But coming up into next week, we do have some earnings announcements coming up. So let's bump forward a week. We've got housing starts coming up next week, but we've got some stocks with earnings. Now, remember, the market is closed on Monday for President's Day. So it's a holiday shortened week next week. So what do we have coming up on Tuesday, which is really where, we have an opportunity to act on this. If we come into Tuesday and we start to see some of those earnings announcements, we've got some that are pre-market, and we've got a bunch. We've got about 80 or so that are post-market. Baidu's in the pre-market, ConAgra, we've got Oxy, we've got Toll Brothers coming with earnings in that housing space. Those could be potential market movers as well. We've got the FOMC minutes coming next week. We've got a 1-year Treasury bill auction. We've got housing prices coming up. So and then Wednesday, Thursday, we're going to have numbers on crude oil and energy. So, it's going to be a fairly news-driven week, although there's nothing significantly market moving in next week. So as this kind of sits, let's take a look at what's gone on over the course of this last week in terms of some of those earnings announcements that were significant in moving the market. We take a look at some of those earnings announcements that happened. We had things like Marriott. We had things like companies like Airbnb that announced earnings, Roku, Coinbase. So let's pop over here to our chart. Let's go back to our single grid and just take a look at what's going on here. Let's take a look at a couple of these. So let's do A, B, and B. Now, remember, anytime we talk about these individual symbols, these are for illustrative and educational purposes only. David asked the question, is earnings season over after next week? We're getting kind of long in the tooth when it comes to that earnings season, when we get into the end of kind of the last couple of weeks of the month of earnings. But remember, this is a holiday. This is a shortened month for two reasons. One, it's a holiday shortened month, so not as many companies announcing on President's Day as maybe would be on a typical Monday, number one. Number two, it's a short month anyway. So we may have some bleed in. Remember, some of the retailers like Nike, Walmart, and others tend to report late in the cycle. But here's Airbnb with a big beat and making that move to the upside. And again, if you think about Airbnb, not as necessarily a hospitality company, but as a technology company, because I think that's where they fall sector-wise, this may be, again, one of those things that is driving the NASDAQ higher, driving the technology sector higher, would be beats on companies like Airbnb. Also, likely Roku. And Roku seeing that big move to the upside, although it got faded a little bit today, a little bit of selling on that pop to the upside. But if we come back over to the left-hand side, we look left to confirm what's going on right. I mean, we're back up above, so we're at least at 52-week highs here on Roku, and held that, even though we saw that decline after the earnings announcement and a little bit of a sell-off there. You also saw Coinbase with kind of that growing focus on crypto, and again, I'm going to give a broad disclaimer about crypto. Remember that if that's something that you're considering trading, make sure that you understand the characteristics and risks of any instrument that you decide to trade, whether it has involvement in crypto or not. So as we start to look at this as Coinbase, we see that gap up and rally, and then it got faded pretty hard up around that $300 resistance level, and see that move to the downside, and that move downward. And then, in the technology space, and especially in the network security space, because this has been kind of the thing on people's lips, right? PANW. I always read this as Panera Bread. It's not Panera Bread. It's Palo Alto Networks. And we see this rally up into that resistance. We're pretty close to it on the earnings, and then that gap down and a bit of a rally. So they came for it and bought it, and making that move to the upside. And so John asks the question, can't understand why Roku's got a future with smart TVs already having the app built in. And again, that goes to speak to, again, the subscriber base, selling ad revenue, those types of things. And, speaking of ad revenue, META, Meta, getting an upgrade today from industry analysts, and a little bit of a push to the upside on a shift in their ad revenue. Google also, GOOGL, Google, the C shares, and or the A shares, and we see that kind of giving us maybe a little bit of an evening, or actually a morning star type of candle pattern. Now, if you want to learn a little bit more about candlestick patterns, check out some of the stuff that Cameron does in his Getting Started with Technical Analysis webcast, and talking about these patterns. But we looked at this a couple of weeks ago as maybe a rising wedge, and it moved to the upside and then slammed back down on the earnings announcement. Now maybe seeing a little bit of a support level down here right around that 182 mark. And kind of coming back full circle here to what we talked about 2 weeks ago, MSFT, Microsoft, or actually 3 weeks ago. This is Microsoft, and we went long Microsoft on that potential bounce. It is moving to the downside, maybe finding a little bit of a support level down here. So it's kind of been going sideways. So we kind of have to make a decision at this point. At this point, that do we get off the bus, or do we stay on the bus? Right? Do we assume maybe at this point that the bus is going to turn around and go higher, or do we get off the bus because it maybe is likely to go lower? And we don't have clear evidence of that yet, right? We might be looking for a close above the high of the low day, or a continuation of that. So this is kind of the difference, the difference in discussion between a fundamental analyst and a technical analyst. A technical analyst might say, well, it's broken a couple of levels of support in the last couple of weeks, and it's not giving us clear evidence that it's going to bounce. A fundamental analyst might say, look, they had good earnings, and they have good valuation, or whatever it might be. I'm going to stay on the bus. So that's the decision you have to make as a trader. Is what are you looking for? What are you looking for as a signal? So what I'm going to do in this particular case, since we're long 100 shares of this, I'm going to put an alert right here at that support level. I'm going to do a create alert, and we're going to say at or below that 406 mark. Let me know. Ring a bell, send me a text. Let me know that maybe that's time that we get off the bus. That's the time perhaps to exit the bus. All right. So one thing I wanted to do before I get to my last little segment here, and that is I want to come back over here and give you some resources. And a lot of you are saying, get off the bus, get off the bus. Fair enough. All right. But if you want to learn more, if you want to continue your education, if you want to do this, on an ongoing basis, not just on Friday afternoons, come and join us here at schwab.com/coaching. Check out our calendar of live webcasts. And you've got that forward calendar of all of those webcasts. You've got what we've taught in the past. And again, remember, we are dark on Monday because the market is closed. But coming back on Tuesday, I'll be teaching futures Tuesday morning, and then James Boyd will be teaching the Investing Master Series. Then Cameron will be teaching Getting Started with Options. And Barb will be teaching Getting Started with Technical Analysis. So we got a bunch of stuff coming up on Tuesday that you can join us for. If you want to learn more about a specific topic like the butterfly spreads that Cameron and I talked about earlier today, go ahead and come over here to the Trader Talks webcast channel, put it in the search bar, and you get that list of topics and webcasts that have been taught around a specific topic. So let's look at earnings. And here you go. Trading growth and value stocks, what traders will look for with earnings. Earnings, embracing and avoiding, says Barb Armstrong. Calendar spreads on earnings, straddles on earnings, lots of different ways that you can approach earnings announcements. So great way to continue your education and learning and resources. And then one other thing, I was, as you know, I kind of trade off in this webcast between myself, James Boyd, Brent Moores. When I'm in town, I teach it, and when I'm not, they teach it. And speaking of being out of town, I'm going to be out of town once again on March 7th and 8th. We're going to be in Scottsdale, Arizona at the Phoenician, teaching the Technical Analysis and Option Strategies workshop, which is a 2-day workshop. And then we're going to be in Chicago, actually Schaumburg, the end of March, teaching the Advanced Option Strategies workshop. So join us there for those live events. They are at no cost to you. Click on Learn More to find out how to register. You find that at schwab.com/events. And we'd love to have you at those events. They are a great, great time and a great opportunity to learn in an environment shoulder to shoulder with other people. So let's come back. And I promised that I was going to show you something before we go. We were going to take a real quick look at the love stocks. Now, this is resurrecting something that Pat Mullally and I used to do in the morning huddle years and years ago. And we did this every Valentine's Day. I posted this on my Twitter page this morning, the love stocks. So I'm going to bring up my grid. And I have the love stocks in a grid. And I'll share this grid with you here as well, just so that you can see it. Again, anything that we share is for illustrative and educational purposes only. It is not a recommendation. And it is not guaranteed as to time or accuracy. So I'll go ahead and put this out here in the chat. And we'll share that again. Remember, that is not guaranteed as to time or accuracy. So our love stocks begin with, very simply, the symbol LUV. It's Southwest Airlines. And we can see Southwest Airlines had a little bit of a day today, a little bit of an update with a long-tailed candle. So perhaps a bit of a turnaround here and moving back higher. Post their earnings announcement. Hershey's, on the other hand, suffering still potentially from high cocoa and sugar prices, but nevertheless, post their earnings announcement, seeing a little bit of a lift over the course of the last few days going into this holiday. Flowers. This is 1-800-Flowers, and this is one that doesn't move a lot. This tends to stay fairly neutral, but seems to be blossoming today into this little bit of an up day, a big upward candle on 1-800-Flowers today. Now, Signet Jewelers, relatively flat. Now, that's probably one that doesn't move a lot. Don't tend to see a lot of volatility in that name, but it has been moving in a downward direction. It saw also a positive day today. Now these last two, and again, I'm gonna disclaim these. Again, these are not recommendations, but Hims, starting to see again some additional upward movement here today. Gap up and rally yesterday, gap up and a little bit of a rally today with a bit of a shooting star type of candle up at the top there of that big upward move yesterday and the day before. So a continuation of that. Earnings still to come on Hims. And Match.com, parent company of some of those dating applications that are out there. Match seeing a bit of a breakout of a symmetrical triangle post the gap down sideways move on the earnings. So all of the, with the exception of Hershey's, all of our love stocks ending up having a positive day today. Hershey's not so much, but that gives you an opportunity. Still, you have several hours to go with an opportunity to get to the store if you need to and buy some of those flowers or chocolates or anything else, maybe a airline ticket or some jewelry. Guys, have a great weekend, a long weekend, and we'll see you back here on Tuesday morning to teach futures. And that is Market Movers for the day. And as always, as we come together here and finish this up, I'm going to sign off the way that I've always signed off on this particular webcast, whether it was the Wall Street Wrap-Up or this, and that is keep your arms and hands inside the ride at all times, hang on, and have fun. We'll see you guys next week. Take care. Bye-bye.